Good morning, guys. We are live. This is Pounds for Breakfast. It is Thursday, 13th of October. And as always, I am your host, Dane Ponomas. Guys, I am super excited about today's session. The whole week, I've been speaking about what is coming in terms of Thursday and what we could expect from the markets today. It is going to be huge. It is going to be massive. Now, listen, if you were trading with us yesterday on the CPI data release, it was a massive day. Now, there's never been a better time to be a Globex 360 trader. We are just going to be taking things even further. Now, remember, this afternoon session is going to be a special broadcast, meaning we're starting a little bit earlier. We're going to start at about 2:15, because as I'm about to show you, when we jump into the fundamental data, we have got a ton of data that is going to come in, and this is going to rock the markets. Now, we are going to look at the data shortly in terms of what that could mean. We're also going to review the Federal Reserve's minutes that were released last night, and we're going to see there's some big things due in the markets today. So if you're excited and you're pumped, guys, pop up those emojis, pop up in the chats. As always, show us some love, and we want to see some hands up in the air, and let us know exactly what you're excited about for today. And if you already have your $100 Globex 360 live account, guys, this afternoon is going to be massive. If you missed NFP, if you missed PPI, if you've missed the last 5 years of trading, that is 100% perfectly fine, because today is going to be big, and we're obviously going to jump in. So just a quick shout out to everybody in our community this morning. I can see Mini Station, Heavily Defended, Sherman, what morning, good morning. I can see Ashwin, Gilbert, Melissa, I can see Rais, Yusuf, Baez, Frank, Peter van Wyk, Thomas, Caleb, as well as Tepo and Peter van Wyk. Good morning, guys. And listen, we smashed the markets yesterday. This afternoon session is going to make yesterday look like we did absolutely nothing. Listen, guys, we've had an amazing week. We've smashed NFP, we smashed Monday, we smashed Tuesday, and we have smashed yesterday. We're gonna do it all over again today. This is the big day for trading. So I really want you to prepare yourselves, prepare your mind, block out some time in your calendar, get some peace and quiet, start to prepare yourself mentally from about 2, get calm, get relaxed, attend the session. I'm going to break down CPI in detail, meaning piece by piece. What does it mean? How does it move the markets? And what can we expect? We're going to trade some massive things as we jump into those data points and into the markets. Now, we're going to jump into the news, and we want to obviously have a look at what is happening in the world and what the world's busy speaking about. And we're obviously also going to break down, what is going to be happening this afternoon. But first and foremost, let's jump straight into the news and have a look at what the market is busy speaking about and what we could essentially prepare for this afternoon. So in terms of the Federal Reserve meeting last night, there was a few comments and people asking me, what's my opinion about that? And, am I worried about it? Remember, the Federal Reserve meeting minutes is essentially a continuation, or the official minutes from the last Federal Reserve meeting, right? When they hiked that 75 basis points interest rate. Now that generally takes about 3 weeks to come out. And then it's generally a discussion and a continuation of those meeting minutes. And what the markets generally do is they look for a change in sentiment. So when we talk about hawkish or dovish, and this is going to come up quite often, when a Federal Reserve meeting or Papa Powell comes off hawkish, it means very strong, very aggressive, very assertive. Dovish is slightly less assertive, right? Still stating the facts, but a little bit more calm and collected, a little softer about the markets. Now, the last Federal Reserve meeting was very, very hawkish. Federal Reserve said they'll do everything in their power to make sure that they stabilize and bring the economy back into control. And this is with a focus on inflation. Now, going through the minutes, we're going to quickly have a look at them. But before we get to the minutes, I just want to point out that the whole of the market right now is waiting for the CPI report. This is the last key piece of data to understand and have a little bit of foresight as to what the Federal Reserve is going to do. Now, I have my own predictions based on the data that I've gathered. And for this afternoon session, I'm going to be presenting you guys with the last 5 years of CPI data, what that's resulted in recessionary periods as well as in normal economic periods, and what we could expect in the markets. And the data that I've looked at so far is mind-blowing. It's going to be big, it's going to be massive, and you want to be a part of that. So I'm not going to get into too much detail today about that, but all you need to know is if you're a Globex 360 client, you are in the perfect place because we are about to make history. Remember, as I said, these opportunities don't come around all too often. We wait for opportunities like this every 10 or 15 years. If we look at the housing crisis, the housing bubble crash and crisis of 2007, 2008, we're seeing a very, very similar moment in time that we're not only able to capitalize on, but take advantage of and ultimately exit the other side of this recession way wealthier from a time, knowledge, and a pure money perspective. So this is definitely the time you want to start dedicating and reallocating a little bit more of your time to understanding and participating within the financial markets. Okay, so as we quickly dive into the minutes, a summary of the minutes, right, is essentially that, the Fed is basically saying the cost of doing too little far outweighs the cost of doing too much. Now, if you guys remember, Jamie Dimon from one of the biggest hedge funds in the world has said there's a very good possibility the Fed could overstep with some of the economic policies and essentially make an economic error, right, in terms of some of their decisions, meaning be too harsh on the economy and essentially forcing the economy into a hard recession. And that's exactly what, people are trying to avoid. Eddie is saying he's new here. Eddie, if you're brand new to the channel, go ahead and smash that subscribe button. So every time there's a brand new upload, you are the first to be notified about that. And make sure you've got your Globex 360 account funded with at least $100. And we will be emailing out the link to today's special session in the next couple hours. So you want to be a part of that. If you're not funded, get funded. The link is in the description down below. So just a massive welcome to Eddie. Greetings to everybody that is obviously here in the team. And guys, this is going to be an amazing journey. Now listen, guys, first and foremost, let me know where in the world you're watching us from. I'd just like to know which city, which country you're joining us from, so we can see where our Globex family is coming from. And we're arranging some very, very special tours and seminars that is going to be coming up towards the end of this year as well as next year. I'd like to be traveling and visiting all of our Globex 360 families, getting together, just having 2-3 days of discussion, of teaching, of just going over the markets, of strategies, of sessions. If that's something you want, put some fire up in the chat. Let me know where in the world you're joining us from, and we're going to see where the biggest parts of our communities are. You guys know that I love certain places. You guys know I love Botswana, I love Lesotho, I love Limpopo, so that's a definite. And we obviously want to get around to the rest of the world by the grace of God. All right, so that's just a quick one. Let us know where in the world you are joining us from. So you see the chat's going crazy, but in essence, what we need to obviously understand here is that the overall tone is still very hawkish, and that the Federal Reserve still plans to push for another 75 basis points at the November 3rd meeting. I do believe it's November 3rd. I stand to be correct. It's either November 3rd or November 4th. The Federal Reserve is meeting again to decide the next interest rate increase. Now, that is why today's CPI data is so important, because if we see a higher than expected number, this means that the Federal Reserve's policies that they've enacted in terms of raising interest rates, regulatory policies, buying back of government bonds, reducing certain types of spending, is not giving them the results that they want in terms of bringing down inflation. Remember, the CPI stands for Consumer Price Index. So when the CPI rises, it means people are paying more and more for everyday goods. And that's exactly the opposite of what the Federal Reserve is trying to achieve. Now, remember, there's a careful balance between overextending economic policies, which makes it harder for the general population. Just by increasing interest rates, it means it's harder and harder to acquire credit. Credit in the US used to be extremely cheap. It's making that harder and harder for everyday people as well as businesses. And this is to reduce the cash flow and the money within the cycle of the economy, right? So the CPI data is going to be a key indicator to set the tone for the next 2 to 3 trading weeks. So listen to what I'm saying right now. What we see today could set the tone. Now I'm about to show you some charts and some price action, but before I jump into that, we are going to jump into that fundamental data and just have a look at what does that look like from a calendar and events perspective. Okay, so let's switch over and let's have a look at what is currently happening on the economic calendar and what does the CPI data look like that we're going to be jumping into this afternoon. So the first item that is obviously fairly big and is obviously going to make a decent amount of impact is the initial jobless claims, right? And that is essentially how many people in the US are filing for unemployment. And again, if that number rises, we're seeing that more and more people are filing for unemployment. The caveat here is that this is only people who are filing for unemployment. So someone who's, let's say, lost their job and just sitting at home or given up on essentially looking for unemployment benefits don't count towards this data. So we generally take this with a pinch of salt because it's not accurate. It's not an exact science. It's based on people reporting the fact that they're unemployed and claiming unemployment benefits. But again, what we're looking out for this afternoon is going to be CPI, core CPI, right? And you guys know that core CPI removes the volatile factors like energy and food, right? Because energy and food contribute the most towards volatility. And that's where we will find that in the normal CPI. And we're going to get 4 sets of data, right? We're going to get core and normal, right? And then we're going to get them for month on month and then in relation to the year on year. Now, the current expectation, and we're just looking at, because we're in such a sensitive period and sensitive time, we're looking at the month on month in relation to last month. Now, economists and the consensus is that they're expecting a 0.2% growth on the CPI from last month, and they're expecting a 6.5% total on the year on year for September. But from a growth perspective on the CPI, they're expecting a slight decline, right? They're expecting a 0.5%. So this is going to be quite important, right? Now, how do we trade this and how do we deal with this? Any number bigger than expected is going to be negative for the stock markets, right? A bigger than expected number will be temporarily positive for the dollar because it's showing that there's more spending. So there's a short-term net effect on the dollar. So on currency pairs, we could see dollar-based currency pairs rise, dollar quote currency pairs fall, but that's not where my focus is. If we look at the PPI data from yesterday, the only pair that we really benefited from, and if you guys were in that ZAR trade, we absolutely killed USD ZAR. Again, another reason you want to be in the markets is while the South African economy and the Rand is in turmoil and we're looking at being grey listed, if you are in a USD ZAR buy trade, not only are you benefiting from leverage, but we killed USD ZAR, just in short summary, right? But if we see this number come out better than expected, like I said, short-term net positive effect on the dollar, but this is really bad for the stock markets because it means that the Federal Reserve, like I said, has not achieved the economic policies that they've set out or what those policies were set to do. And that means they're going to come out swinging. And we could see, as I said last time, I had a feeling we could get as much as a full 1% base interest rate hike. That's 100 points, right? Again, if we see a higher than expected number by a good amount of standard deviation, that is exactly what we could see. But enough about that. I will cover that in a large amount of detail this afternoon. I'll break it down exactly what those numbers could look like. And for right now, we obviously want to jump into, what we're going to be looking at from a markets perspective. And that's why we're all here, right? Is to jump into the market. So let's jump in and let's start off with some FX analysis. And we are going to move into live trading very, very shortly, but just quickly having a look at where the markets are sitting. And we're going to start off and open up the FX analysis as always. And we're going to start off just having a look at that dollar index, just to show you how unaffected the dollar was yesterday from the PPI perspective, the producer price index, and pretty much remained dead flat, right? This is looking at a 4-hour time zone. So again, on the FX side, we aren't seeing huge volatility, but I expect the volatility to be fully concentrated within the markets of indices. So looking at your US 30, looking at your NASDAQ, looking at your German 30, that's where I see the biggest impact and volatility to happen. Now, let's transition into some live trading because we are at the New York or the London market open. And we're going to start and jump in and have a look at what is currently happening, excuse me, on US 30. So US 30, as we were currently sitting yesterday, was sitting in a beautiful position. We shorted the US 30 yesterday afternoon in a live session. US 30 broke back into structure and then we ended up buying US 30, right? So if you caught both that short as well as that long, massive well done. I do believe our pip count for the day was plus minus about 2,500 pips per position. So if you had more than one position, you had 3 positions, we're talking about 7,000 pips. But look at where we are now. We can currently see that US 30 is busy failing market structure. And I do believe that this is in relation to and potentially due to the fact that we could start to see that negative data. So I'm putting in a short position. I'm putting in a feeler trade on US 30 right now as we speak. And there's a couple reasons for that. If we dive in on a 1-minute time frame, right? Let's just open this up here really quickly. If we dive in on a 1-minute time frame, we can start to see that from a rising market structure perspective, US 30 is giving us some hints of that weakness towards that top side, right? So we're getting that temporary push down. That nice little spike on the London market open tells us that the markets are aware of something that maybe we are potentially not. So I'm going to have my feeler trades put in those positions right there. And essentially all I'm going to do is allow this one to ride out. We are sitting in between some really good market structure here. I will zoom in for those of you who are watching on a mobile device, because I know it's not always great to watch on a very, very small screen. But ultimately, this is the market structure that I'm currently seeing potentially play out for US 30. Now, just a note of caution, right? We do have another support level that I am seeing right now that currently sits where we're at. But again, because of that strong little impulse towards the downside that we just got in terms of the market open, that tells me that the markets are aware of something that we might potentially not be aware of. So if you are already in a sell with me on this one, you should already have moved into profit. Let's just open that one up there. And what we want to go ahead and do here, because we don't want to take too many chances this morning, because we want to save our trading energies and efforts for this afternoon as we jump into that CPI data release. I'm going to go ahead and just set up some 1,500 pip point trailing stops. Remember, that's only about 100 pips, right, in the market. So I'm going to just go ahead and set those up. From a stop loss perspective, all I'm doing is I'm just putting my stop loss back into structure, and I'm going to utilize the most recent market structure that I can find, and that's going to be that structure over there. So anything above the $29,235 mark is where I don't want to be in this trade. But again, right, should we get a underwhelming CPI data release this afternoon, then we are in the perfect position. I'm just going to go to an hour. We are in a perfect position to break this market structure towards the top side, right? So a weak CPI number, meaning negative CPI, shows us that inflation is potentially at its peak, right? And that we could start to see that inflation will start to come down. And that will be the perfect opportunity to start looking for longs on indices as a whole. It means the Federal Reserve might be a little bit more gentle in terms of their approach, and they might use that data. Remember, we've got a lot of data over the past couple of weeks that go against the Fed's policy meetings, right? We had a massive NFP. US unemployment is pretty much at an all-time low in relation to where we are in this recession. And remember, when we talk about recession, the technical definition for a recession is 2 negative GDP quarters in a row, right? We got the first negative GDP quarter for Q1 of this year. We got the second negative GDP quarter for Q2 of this year. The White House revised the understanding of a recession by saying 2 negative GDPs don't just justify a recession. We got a third negative GDP. So we're in a recession, guys. And understand that when the US goes through a recession, that moves 70 to 80% of the world's money is moved and transferred in the US dollar. It's the world reserve currency. That is only a ripple effect. Remember, the housing crisis that happened in the US did not happen here, but we lost a lot of companies, a lot of jobs as a result of that. So we are already moved into profit. I'm already in about a couple $100 worth of profit here. If you guys are on profit with me, put the flames on the screen. Your take profit should already be in profit, and I'm running about $400 or $500 on some quick trades there in profit. Now, let me ask you this: $400 or $500, where else in the world can you make, let's say, 8,000 Rand in the space of 10-15 minutes, learning about the markets, being in a live session? And this is why, we're so proud of what we do, because this does not happen anywhere else in the world right now, where on a daily basis, the broker will be with you, showing you, teaching you, trading you live. And guys, this is such a massive thanks to the Globex 360 team. As I've said of always, we sometimes, on these positions where we're making profit, we're having a great time trading, and, people saying, wow, thank you, Dane, thank you. I'm just your host, right? Yes, years of experience, whatever you want to call it, but the team behind the scenes, the amazing human beings that are behind the scenes that are helping to push and make this possible are some of the greatest human beings I've ever met in business across the board. So, when you're in profits, when you're celebrating, tagging us on social media, tagging at Globex360 on Instagram or Facebook, it does a lot for the team. And again, this is really a team effort more than anything across the board. So my trailing stop has secured some profit there already for me this morning. And my stop loss is not too far away from where we're currently at. And I'll probably just readjust it. I think we have a good support level in the zone here. So I'm pretty happy to leave one of those trades in place there. The profit that I banked initially will equal my stop loss on the second trade. So even if markets move up here, I'll be taken out at an equal pace. And I'm not too worried about that. But yes, we do need to obviously keep our focus on for the CPI data release this afternoon. That is going to be huge and that is going to be massive. So I'm just looking for a good resistance zone to essentially position myself, because I would like to hold this long term. And the best position I can see in the markets right now from a stop loss perspective, I'm currently on a 5-minute time frame, and you can go ahead and do the same thing. But my stop loss on my side, I'm going to position myself on the $29,000, $29,207 on the Dow Jones or the US 30, right, is where I want to position myself. And that's essentially where I just want to keep my stop loss, right? It's just above and just in that area. We are getting a slight pushback in the markets. Again, this is normal. If we have a push down, and I'm going to show you how to deal with this from a technical perspective, all we want to do is utilize Fibonacci here. And we just want to make sure that the absolute, if you want to hold this trade and you don't want to lose it, then the absolute high of this market would be the 88.2, right? So if you wanted to really, really hold on this trade and you want to swing trade it to the downside, assuming that we're going to get a strong CPI number for this afternoon, and you want to get in already on the action before this market starts to move lower, again, in relation to the Federal Reserve's minutes and meeting, right? The Federal Reserve is basically saying they will do whatever it takes to make sure they bring the economy back into control. Now, generally speaking, that means hammering down on the economy. Generally speaking, that has been bad for markets as a whole. When I talk about markets, I'm talking about stock markets. So looking at that and looking at the potential for a CPI move, remember the producers price index came out positive yesterday, and generally speaking, when your production costs rise, who ultimately pays for that? It's the consumer. So when you're producers cost rises, that is generally passed on to the consumer. So I have a feeling we could very well be in a position where we get a very high CPI number this morning, or this afternoon rather, and we see markets fall to the ground, right? It's going to be a little bit of a crazy one. We want to be paying attention to it because it is going to be massive. It's something we want to obviously keep our eyes on with quite a lot of detail as we lead up into the markets for later on this afternoon. Okay, beautiful stuff. I just want to double check the live broadcast is in play. There we go. Healthy broadcast. Just having a look at where everybody is joining us from quickly. Let's just see here. Okay, my chat's not updating on my side. Let's have a look here. Downloading pounds for breakfast, massive. Let's go. Dane Fayez is saying, let's go. Gauteng, we have Newcastle in the house. We have Windhoek, we have Johannesburg. We have someone in Germany, but still in South Africa, Gaborone, Pretoria, Botswana, Namibia, Lesotho. Let's go. Let's have a look. Port Elizabeth. Powerful. So guys, we are going to be having votes a little bit later on, and we are going to be jumping into having a look and understanding exactly where you guys are logistically, and we will be having a ton of more fun, and as well as communications on where we're going to be traveling in this last quarter, as well as into the next year, right? I want to start to make it a culture of getting around and being able to have some time with you guys and meeting you all. Zoom and these live sessions and broadcasts and YouTube is amazing, but there's no substitute for the real thing. So we are going to have some fun. Joseph in the house from Kuruman, Northern Cape. Absolutely amazing. Guys, stand by because we are going to be releasing an interview with Joseph, an amazing student. His journey is something you guys really want to hear about. We're going to be wrapping up that interview this weekend, and you want to hear his story because it is life-changing, it is powerful, and it's a testimony of what the markets could do in your life should you go and put the effort, the time, and the commitment that he has. So, my brother, I'm super proud of you, and look forward to that. So we're currently seeing, just going back to the US 30 really quickly, I quickly want to also just have a look this morning at what indices are doing across the board. So NASDAQ, German 30, looking fairly flat. We do have those pin bars on 15 minutes. So we see that spike down pin bar. I just want to see if US 30 is giving us also a spike down pin bar. Let's have a look here. Okay. Right, so we are getting that spike down pin bar, which generally speaking at the bottom of the market would be a little bit worrying, telling us that that's just an impulse towards the downside, that markets haven't yet fully decided that's where they want to go. So that is where we would start to then consider and then look for potential longs. The only thing about a long here that I would be looking at is that if we break this 88.2, I would be more than happy to go in a long on US 30. Markets might want to build up to the fact, okay, so we are going to go long on US 30 and we're going to buy out US 30 and place our stop losses below the previous support. So I'm going to pump in 2 orders there at that 88.2. Now, again, we have only just touched that 88.2. We have not gone through it, but that would mean I essentially would like to then try and hold through some buys. But just please also consider the fact that we are in a bear market on US 30. And again, markets are waiting for that volatility. Markets are waiting for that CPI number. And again, we are still in a bear market. So we don't always want to be buying in a bear market. We want to be selling in a bear market. So what I might end up doing for today, and this is a little bit of a controversial trade setup, is I'm going to go for a hedge trade position, right? So I'm going to go both ways. And what this means is that I'm essentially creating a sell as well as a buy at the same time, right? And don't hedge unless your account is in a position and you can afford to. But what I'm doing here is I'm holding a sell and I'm placing that above the 100% level in terms of the next stop losses, right? But I'm also holding a buy. So meaning I'm locked in on both positions. Whichever one ends up being the absolute runner, that will be the position that then takes preference regardless of if I'm watching the markets or not. So while markets are in limbo, I'm neither making money or losing money, right? So as markets edge up higher, on my buys, I'm making a profit. There we go. Look at those massive buys there. That is moving beautifully and perfectly. So what we're going to do on that buy there is we're just going to drag our stop loss under the current market order level, and we're going to hold that buy towards the top side. We've broken the 88.2 fib, but at the same time, just a word of caution, just to make you aware, we are at that diagonal resistance, right? So I would consider taking some profit now. That spike was around about 300-400 pips towards the top side, but I would like to hold these buys in the event we do have some sort of breakout, or that the markets are aware of something that we are not. Okay, so I would say close up one position now. I'm going to close up one position for about $400 there, and I'm essentially going to leave that other position open, and I'm going to go with a trailing stop this morning of about 4,000 pips, 4,000 points, sorry. So if markets move up, it'll drag my stop loss with it. Just zooming in on a 1 minute time frame, that is what we're currently seeing. So we're seeing a nice big spike. We are seeing a spike above the London market open, and that is generally what we want to see from a trend continuation perspective, right? So if London market open starts in one direction and we break that high or that low, that is generally the market signaling to us that that is where it would like to go over the next couple hours. So that is kind of where we want to sit. Now, depending where you've caught this, obviously you want to manage stop losses accordingly. But again, another thing also just to be aware of is we are at that 500 period moving average on a 1 minute time frame. So again, I would like to break that 500 period one moving average, and then should we go above the last high that we essentially made, that was about 6:45 this morning, should we go above that $29,278 on US30, I would then add positions, because not only are we making a new high, but we are then potentially breaking this resistance level that is probably most clearly seen on about 15 minutes. There we go. So on 15 minutes, if we break that level, then I would really like to get long. Also considering just one other factor, in the sense that we have gone through this level by 300 or 400 pips multiple times, right? So you obviously need to just be aware of that, be cognizant of that, because it is obviously fairly important. So we got a nice little trade in there. We got that little buy in there. I'm going to move my stop loss to entry because I've already closed out that first trade in profit. So I've got nothing to lose here, right? So I'm now an investor. I'm sitting passively in this market. I have a position in the market, and my stop loss is at break even. So no matter what this market does, worst case scenario, it closes me out. I lose nothing. Best case scenario, we get a trend continuation and a breakout to the top side that could result in a $5,000-$10,000 trade. Meaning, 200,000 Rand made in the space of a morning session. So again, and this is what it comes down to, is that it's when preparation meets opportunity. If you don't have a trade in the market, right, you have no opportunity to make money. Yes, markets are risky, and yes, trading contracts for difference with leverage, you don't know what you're doing, can result in wiping out your account very, very easily. Trust me, I know. I've had to blow many accounts in my lifetime to get to the point of understanding and feeling and being in a position to do risk management. But if you don't have a trade in the market, if you don't have a horse in a race, you can't win the race, right? You can't sit back and say, I want to win the lotto, and you've never bought a lotto ticket, right? It's not gambling, I get that, but just so that people can understand. So we are running quite nicely. We're still in run about 250, 300 pips of profit right there. Let's quickly have a look at how you, let's jump into some other markets. Let's quickly have a look at some FX analysis. And I want to have a look this morning quickly at how USD ZAR is reacting to this data. And USD ZAR is acting exactly as we expected. We talked about and we bought USD ZAR yesterday. I closed up some of my positions because I reached my profit target on USD ZAR. And again, yesterday I was saying, as we got that PPI data release, let me show you where the PPI data release came. So that was the PPI data release from yesterday. We got that spike up. I bought USD ZAR. We had a slight bit of a pullback. I just want to see we're on the right date here. No, we're looking at the 12th. Let's see here. Oh, there we go. Okay. So we got that PPI data release. USD ZAR spiked up off that 1820 mark, slight pullback, slight correction, and then we've obviously continued that push towards the top side. So I had a take profit zone, I believe at the 1832 mark, somewhere around about there, and that took me out with some good profits, and I closed up my position. US 30 is doing the most. We're currently running around about 400 pips in profit. So just to give you an example of what that means, right? If you're running $1 per pip, again, that's $400 that you've made in a trading session. So ideally, when it comes down to trading, you want to have a plan, you want to have a strategy. You're not just opening up trades for the sake of trading, but you're looking at, how can you make a percent per day? Just a percent. And the results and the after effects of that is absolutely mind-blowing. Now, we are going to be hosting some sessions later on in next week, where I'm going to be showing you one of my personal strategies of how I understood the markets, how I created a strategy and a plan to look at my expenses, to take away something like Netflix, to take away unnecessary costs, and then compound that with something like looking at a percent per day. If you just take Netflix per month, that's 200 Rand per month. You add it up every month, it's only 1,400 Rand. Nothing to write home about. But if you start to look at getting a percent a day, and you add every month, you add your 200 on Netflix, looking about 14,000 Rand at the end of a 14-15 month cycle. Now you go one step further, you start putting 1,000 Rand every month towards your accounts, and you start looking for just that 1% a day. The results are massive, right? It takes you to a whole another level of understanding, a whole other level of wealth. And that is what entering this recessionary period and exiting this recessionary period is all about. Getting tools, equipping yourself, aligning yourselves with the right partner. Guys, there is no other name in Southern Africa, within Africa, and very, very soon the world, that you want to be with from a brokerage perspective other than Globex 360. So just send some love and just drop some hands up in the comments and let's go. Okay, so Dan, I'm going to take you to grow accounts to $500,000. Guys, listen, if I tell you I've lost millions and made millions in the space of a month, that's what it is all about. The bigger you go, the more you stand to risk, the more you stand to lose. But ultimately, it's about building a portfolio for yourself that you can end up taking and being able to capitalize on that market. So when I say I'm looking for a percent a day, all I'm looking to do is make $3,000 to $5,000 in a day. If I've got the $3,000 to $5,000, I'm adding to a portfolio and I'm making sure that I grow it. And I'm making sure that that's in the dollar as well. Because remember, as the Rand loses value and you're holding dollars, not only are you growing a percent per day on your trading activities, you're also benefiting from the South African Rand's, I would say, downfall, if you will. And it's protecting yourself against the losses on the Rand, right? Again, I've explained this in previous sessions. And for those of you who know me, I've explained that if you bought a home in South Africa 10 years ago for R1 million, right? The average in the property market, if you're getting 5 or 6% over the space of a year, you're doing really well, depending on where it is. If it's a cluster, if it's within a complex, if it's a standalone. Welcome, Stephen, and thank you for subscribing to the channel. If you bought a R1 million home 10 years ago, right, and you essentially got 5 or 6% per year in terms of ROI, or in terms of evaluation or increased value on that property, in 10 years, you would expect that home to be worth 1.6 million. And you'd be right. It probably would be, right? You contact a property specialist. Let's say your home is now in market value with 1.6 million. But that same R1 million that you spent 10 years ago, right? When the Rand was 7 Rand to the dollar, we're currently sitting at over 18 Rand to the dollar, meaning that that home, right, that is worth 1.6 million is worth less than 700,000 Rand in relation to the rest of the world's in relation to the rest of the world. So if you sold everything you have now, right, you're net poorer than you were 10 years ago, even though your property evaluated in pricing. So I want you to think about that for a second, especially when things are valued in local currency. And that is why I think the future sits in blockchain. That is why I think the future of fractionalized property investing sits in alternative currencies, Because if your home could be valued in Ethereum, in Bitcoin, in any of these other relative instruments, provided they become a little bit more stable, then your relation of wealth in terms of the rest of the world is 1-to-1, right? And you're not so dependent on local politics and what all ends up happening there. Anyway, that was just me rattling off and giving my side bit, but there are some very exciting things coming in the very near future. Obviously, this is not USD, this is US30. But yes, so we're killing US30 this afternoon. Stop losses are on profit. I'm going to move my stop loss slightly more into profit here. And I'm just going to be a little bit greedy and just secure at least a couple $100 this morning as we obviously prepare ourselves for the session that is going to be coming, as we're going to be dealing with this afternoon. Now, guys, remember the CPI data release that we're going to be getting is going to be massive. You want to be a part of that. And just a massive shout out to our whole community that is with us live. You guys are absolutely amazing, and you make the shows exactly what they currently are, and we absolutely love you. So if you're part and parcel of that, thank you as always for the support. Thank you for always just being here. The comments are fire. You guys are fire. You guys are amazing. As always, remember, this afternoon's focus is going to be 100% based on what type of data we are going to be getting on that CPI. So this special session, I'm going to start a bit earlier. I'm going to show you a bunch of data. I'm going to show you some analysis. I'm going to show you what I think is going to happen based on the information that we receive. And you don't want to miss that, right? We are going to see a massive day from a volatility perspective. And you obviously want to be part and parcel of that. That is where it's all going to be. So again, for those of you who have your live accounts, we're obviously going to be looking at starting at just about after 2. It's going to be about 2:15. I'd like to start a little bit earlier. So obviously, if you get your email, just have a look and double check on the link when that is going to be starting. I'd like to start a little bit before 2:15, maybe 2:10. Gives us some more time to obviously speak about the markets. And yeah, it's going to be a very special edition show. And this is for live accounts only. So if you don't have live accounts and you're asking me for the link, please understand, I can't give you the link. It's the system that's sending out that email. It's not me. It's automated. It checks your live account and it pops you out that email. Okay, so guys, we will be seeing you all this afternoon. For those of you who have your live accounts, if you don't have your live accounts, guys, you need to get one. It's absolutely a no-brainer. Listen, in addition to that, I don't know how many of you guys have got your cashback wallets sorted out, but listen, you need to get your cashback wallet sorted out, right? It is an absolute no-brainer. Globex 360 shares with you a portion of the spread that they give directly back to every single one of you. Now, I want to show you something quickly, and I'm going to share with you my cashback wallet just in terms of the last trading week, right? I've moved money out of my cashback wallet already, but every time that I place a trade, right, Globex gives me money back for the trades that I place. And this is automatic, meaning there's nothing that I need to do. All I need to simply do is have a Globex 360 live account, and whatever activity happens on my live account, I get back real money in dollars that I can do whatever I want to do with. I can send that, I can withdraw that to my bank account, I can put that in my trading account. This is just for this week, right? As an added extra, as an added bonus, I've already made, let's say, $120 absolutely free. There's nothing I had to do. This is just from my trade activity, and that is what it is all about. So Neil's saying he's got a live account but no email. Neil, you need to have a minimum of $100 in your live account in order to get that email. So if it's $99, you're not going to get the email. And the emails will go out at around about 10 and 11 today for today's show. And just obviously you want to make sure that you are having a look at your junk and email spam folders, because sometimes the emails do go out into those particular folders. Okay. Keegan saying, have we started live trading yet? Keegan, where have you been? We started live trading at 9 already. We sold US30, we bought US30, and I believe we're still rocking profits. Oh yes, guys, look at those profits. If you're in profits on US30 on that buy, let's hear some love. Let's share some love. I'm currently running about $1,000 in profit right now on US30. It's a quick 15, 16, 17,000 Rand, right? That's where we go. Keegan, you're never late. How did you get your late this morning? Keegan's always early. Now he's missed $1,000 trade, just like that. So yeah, we're absolutely smashing US30 this morning. $1,000 towards the top side. We're still running. It's still pushing. Let's see here. We're running at the moment about 500-600 pips in profit towards the top side. But guys, let me tell you something. This is nothing. This hasn't even started. We have not started as Globex. Today's trading session has not started. You are just seeing the beginning. You're just seeing the start. Things are about to get crazy. I wish I could tell you all the plans that the executive team has for every single one of you, but let me tell you, there's no better time to be a trader than right now. There's no better time to be a Globex Street trader than right now. Shamim's asking what lot sizes do I use? So generally I use between 20 and 50 lots. Depending, I don't like opening 10, 15, 30 trades. I generally try to open just 1 or 2 or 3, and then I close those positions in relation to that lot size as I'm using. Remember, when it comes to Globex 360, we have 1-to-1 ratios on US30, right? So our one lot is the same as a 0.01 elsewhere. So when I'm opening a 20 lot trade, it sounds massive, it sounds big, but that's basically half a lot elsewhere on a 1-to-100 broker. So it sounds like big trades, but it's really not. You can go as far as opening 1,000 lots if you really wanted to. So yes, guys, listen, have yourselves an amazing day. I'll be seeing you guys all a little bit later. If you got your live accounts, we'll be emailing you. Remember, check your spam, your junk email folder does sometimes go there. And I'll see you guys all a little bit later this afternoon. The CPI data is going to rock this afternoon. You have two options. You're either going to watch the broadcast after the fact, or you're going to be a part of it live. It is up to you. You decide. As always, guys, remember to live, trade, do things Globex 360 way. As always, I love you guys, and I'll see you guys really soon. Until later.